Hello, hello. How's everyone doing today? Please let me know if you guys can hear me. Put it down in the comments. We are combining two different uh, live streaming platforms, OBS and StreamYards, so we can do something like this. Seamlessly change these types of settings here. So please let me know if you can hear me. And if the video's choppy, please comment down below. So, if you can help us out, please post us on Stock Twits. This is going to be another calculation. So, personally, I preferably like using a discounted cash flow statement analysis. I think it's more accurate, and a lot of analysts they use DCFs, and a lot of people with inside a company use DCF, and they use a WACC for internal um, intrinsic value calculations to see if they can do an acquisition of a company or start a project to see if it's actually worthwhile and it'll add value to the business. So in this video, we're going to be doing a price to sales, or what I like to call a price to projected sales calculation. Perfect. Thank you so much, Danny. And I like StreamYards here because we could show the comment. So let me show you how this looks like. And so it's a part of our mastering stock market course. If you go down to proprietary equations for people that are already enrolled, it's going to be under here. Now we normally do the intrinsic value calculation. I have that one up first because this is the one that I preferably enjoy, because it's just I personally think it's a lot more accurate. However, this does have accuracy, but it requires some assumptions that, I mean, they're both assumptions, but these require some understanding and assumptions that need to be met. And we're going to be doing them on here. So people that are in the Mastering Stock Market course, you'll be able to learn how to use it. So there's a lot going on here. It's packed in a little small box, but we're going to be doing some really cool things with it. But in order to use this, we would have to log into or go back to the homepage on our course and go to technical and fundamental data analysis. Okay. So once we do that, we need to go in and type in CLOV, and this is directly from your course. Okay. So we're going to essentially get started and get to business here. So once we go over to the Clover's chart, we're not going to be doing any technicals today. We're going to go down here to more financials. Okay. We're going to go and remove the revenue, the net income, and we're going to make the graph blank. Then we're going to go in the search bar here. We're going to do price to sales. And then this is the price to sales ratio. And then we're going to split it off to quarter. So as you can see here, we can see that Clover's price to sales, ignore these and focus more on these. Clover's price to sales hovered anywhere between 10.79 to 9.64, 2.77, 1.14, and 0.79. So, but if you look at the current, it's currently at 0.149. Okay, so this is Clover's kind of average. So if you want to, and this is what I advise to do, we can go in and we can take the average of Clover and say 10.79 plus 9.64 plus 2.77 plus 1.14 plus 0.79. And you can find this directly from our Discord here. I mean, from our alstocktrades.com mastering course website. I'm just so used to saying Discord. And then what you can do here is you'll find that we can say there's 6 numbers, 1, 2, 3, 4, 5, 6, and the sum is 25.65. So 25.65. Then you can go ahead and divide it by 6. Again, 1, 2, 3, 4, 5, 6. You'll get an average of 4.275. Okay, so that's the average 5-year. I says here price to sale ratio 5-year average, but you can go in and do something, right? But it's 4.275. So we can put this here, 4.275. All right. So then we would want to do expected revenue. Okay. Now, the expected revenue here is, we can say $3 billion for 2022. They said it's going to be anywhere between 3 to 3.4 billion. Okay. So when you do that, we'll put 3 billion here. And then you know how I remember I told you Clover's growth rate was around 81% since 2018. So if you go 2018 for the revenue and you go ahead and type 281 million versus 3 billion for 2022, you can see they're growing around 81%. And you know how I said that that's a little too high for me, even though they're growing 300% year over year or quarter over quarter, year over year for the last quarter. That's unsustainable. And even 81%, I think, is unsustainable. So to be a little bit more, conservative, we could take 75% of that, which is 60.75. So you could just alter this and say 60.75. Now we have a growth rate of where we expect the company to be in. And here, this is this is what we're expecting the revenue is going to be based off of this. So by 2026, they should have around $20 billion in revenue, right? Then we would want to go to these shares outstanding. So right now it's 470.85. And then the current stock price is $2.20, what is that, 24 cents? Let me just confirm that. $2.23. Ooh, I'm off by a penny. Let's go here. 2.23. So as soon as we do that, you know, there's a lot going on here. So let me just walk you through it. So you can look at the projections here and it gives you the numerical values. Now, personally, I'm a graph guy. So let's zoom in right now and focus on this graph here because there's a lot going on here. So let's sit down. Let's explain this here. So ideally, because we know that Clover's revenue multiple has shot up to over 10, we said we took the average and we got around 4.2. Okay. So ideally, Clover should be trading anywhere between $20 to $34, right? Based off of the historical revenue multiples of the company. I'm about to compare the revenue multiples, price to sales, to United Healthcare and also Humana. Okay, we're going to do that right now. It's going to be a pretty comprehensive video. Okay, so follow along. Okay, so we know that in 2022 it's going to be anywhere between 20 to 34. The base, which is here, the base case is $27.24, which is right around where Clover peaked at $28, right? The 2023 is going to be anywhere between 32 to 54. But again, my price projections for the company, from my intrinsic value calculation, I like to aim more for 2024, 2025. I think 2025 and on is going to be a very successful year. And you can see it's going to go anywhere between 84 to 180, 84 to 141, which is around that. You know, I would say my calculations, my price target's $48, but I want to just kind of show you where could this be? Like how far could the stock go, right? But before we get to that, now you can look at this and you can see, you know, by 2026, it could go it can be over $100. So there's no doubt that it could do that. However, I want us to now just take a moment. So now that we know the price to sales ratio for Clover, let's go to the competitors. So the one that's closest to market cap is Humana. Okay. So if we go to Humana and we go again to more financials, right? And if you want to learn more about it, you can go in and see what the analysts are saying. You can look at the technicals to see what's going on here, right? Right. But we're going to go to financials right now. We're going to cut off the net income so it doesn't graph it. And we're going to go to price to sales. And then you could go in, and this is a more comprehensive company in terms of it's been around for a while. You can do quarterly to see, but you could do annual here, and you can see that it went the price to sales went anywhere between 0.5 to 0.76. So we could take the average here and say 0.5 plus 0.76. And we could divide that by 2. Now, this is the most bearish case, 0.63. Okay, so we could take the price to sales ratio of that. So I want you to remember that. I'm going to type Humana for here. Okay. Now I want to look at United Healthcare stock. Its ticker symbol is UNH. So let's go back here. Type in United Healthcare. Go to the financials. Again, cut off the revenue and the net income for right now. And we'll go to price to sales. Let's graph that. And its price to sales are hovering anywhere between 0.7 to 1.67. So let's do that. Yeah, 0.7. Want to make sure we get it all. 72 plus 1.67. Okay. And we could divide that by 2 so we can get the average. So 1.195. And this is for United. Okay. So before we do the calculations, I want to let's have a talk. So right now, if you look at Clover, it's hovering around 0.4, right? 0.4, 0.5. And on average, the market is anticipating that this is just an insurance company, right? That's what they're basically looking at this company as. It's just an insurance. Vivek said specifically that after a year, 2 years, people are going to be like, "Oh wow, they're an actual technology company," right? And once that happens, then you're going to start seeing the price to sales ratio go anywhere between 4, 5, 6 to 10. And once the market becomes risk on again, in fact, let's bring you here really quickly. So on our Al stock alerts, which is included in lifetime for the mastering course as well, we go to exclusive daily briefing. Okay. Today, I'm going to read this to you because this is an important graph. It says here, our risk on off indicator is at all-time lows. We pre-graphed a 200-day MA as it predicted to crash before the actual 200-day SMA when graphed against the S&P 500. So based on the indicator, we're nearing the peak of risk off, and it's right before a historic bull market. So let me go ahead and show you what I'm talking about. So this is risk on, risk off, okay? This is the 2020 pandemic. You can see that once we crossed below this 200-day SMA, normally people graph 200-day SMA off of the stock. We're actually graphing it on the indicator, which is really it's like using a statistic for a statistic to get an accurate zoom in, right? We're looking at anatomic sequences here, right? We're going deep. So as you can see, we're at risk off levels here, and we're at levels that are more risk off than the 2020 pandemic, right? So what's cool here is that once this thing recovered and finally broke right there, like this is when it was like it bounced off of the 200 SMA. You can see it literally predicted the peak at the market. So that's why I like this, because it's very accurate. Now, this is data from 2017 to 2022, but we have data longer. So this is 2002 to 2022. And as you can see, we're at levels now where we haven't seen since 2016 was a scare. Again, that's when the Feds were doing the taper and all that. 2012 and the 2008 financial crisis. And on average, if you take how long these last, it's about 2 years, 18 months to 20 months, right? But right after, we're looking for that recovery. As soon as it breaks that SMA, we shoot up like crazy. We shoot up like crazy. Sorry, my cat here. Okay, so I just wanted to show you that, right? Just to give you guys a holistic understanding. So right now, we're going to use Humaina's average price to sales. So 0.63. So we go back up here, and now instead of 4, we'll say, imagine if Clover is just an insurance company, okay? 0.63. Let me just double check. I'm always like anal about this. All right, 0.63. Okay, so as soon as we do that, the calculations just changed, okay? So now let's zoom in, okay? So now it's saying that Clover in 2022 should be anywhere between $3 to $5. $3 for the bear, $4 for the base. Excuse me if you hear my puppy. She's barking. And then $5 for the bull. Okay. So that's for 2022. All right. You can see that that's hovering. And if you look at Canaccord's price target, it's around that, right? So you can see this is like, I'm trying to show you how analysts are going to be pricing this for the future, right? So you guys are like, what? Stock is trading at like 50. Why is the analyst saying it's below that? So you guys understand, right? When the future comes. So 2023, it's going to go anywhere between $4.84 to $8. Okay. 2024 is going to go anywhere between $7.78 to around $12.97. 2025 is going to go anywhere between $12.51 to $20.84. See, which is why I said my projections are anywhere between 2024 to 2025. And again, these are the most bearish of cases, right? And then 2026 is going to go anywhere between $20 to 33. So let's just say, for example, that Clover is just going to be an insurance company. That's it, right? And the base is for 2026, which is in 4 years from now. That's $26.80. Okay. So let's do the math here. $26.80 divided by $2 where it's trading around right now. That's 13x your money. Okay. So if you want to do the, 2680 minus 2 divided by 2 times 100, let's do that. That's about 1,200%, assuming that Clover's just an insurance company without any artificial intelligence SaaS-like business. And if you were to divide that over 4, we're looking at a 300% annualized return, which is freaking insane, right? But what do you expect when you look at PayPal? When PayPal is down literally 74%. When you look at Meta, and Meta is down 54%, right? So what do you expect from these big behemoth of companies being down this much, right? So obviously the market's pretty risk off right now, and as it should be, because we haven't experienced inflation like this in the past 40 years. So now that we did Humana, now let's move on to United Healthcare. So let's say they're in the upper echelon and they're high growth. We can do 1.195, right? 1.195. And as soon as you do that, the calculations go anywhere between, for 2022, 5.71 to around $9.52, which was right around kind of 2021's price action for a while, if you recall. 2023, 9 to 15. 2024, 14 to 24. 2025, 23 to 39. And then 2026, 38 to 63. Now, my price target is around $48. Used to be 40, but again, it's around that 2025 projection. So make sure you do your own due diligence, but I hope that this was helpful. We wanted to create something like this to help people out, because let's say if you want to do Palantir or any stock you want, you can go in and essentially type this. Now, you're going to have to look up the shares outstanding, which is simple. You just go here, type in CLOV, right, on our All Stock Trades website, and you go in and type in outstanding shares, and there's your outstanding shares. It's around that, right? So you can go to Seeking Alpha, Morningstar. You have it there, right? So if you have any questions, please let me know. But on average, this is it. So I want to go ahead and just briefly switch topics and then come back, kind of like take a mental break. So a lot of you guys were asking me, like, how am I able to organize? Well, there's my cat. How am I able to organize? Here, you want to say hi to her? This is my little kitty. She's cool, right? She thinks she's a lion, right? So a lot of you guys ask me, how do I organize my life, and how do I kind of keep things consistent, doing business, medicine, all these things, nonprofit. So I have this thing that I personally bought with my own money. It helps me keep active. I'm going to explain to what it is. So I paid this with my own money, and I actually reached out to the CEO. I remember taking a poll for our YouTube channel, and you guys said that you were interested in time management. So without further ado, I wanted to introduce to you this product. So this is called Analog. What it does is it allows you to essentially take the days, what you need to do, write them down of what you need to do today, and then have different signals, what you need to do next or someday. And it allows you to basically keep organized and not be on your computer, right? Because you can get so distracted by that. And it's extremely helpful, and it's really changed the way I organize myself, because I like calendars that are on the computer, but also I want to have something that I can literally write down. So it's an incredible product. And I spoke with the CEO. Again, I paid for this full price, and I also pay for the subscriptions full price, right? And I will continue paying for them full price. But luckily, if be a link down below at the end of this video, or you might be able to see it now, that is geared to Al stock trades, and you will get a 10% coupon off of this purchase. So I hope this helps you as well. So now let's get to the questions. So I wanted to show you guys this. All right. If the Federal Reserve tapering $9 trillion worth of assets on the balance sheet caused a lot of pain in the stock. So yeah. So when the Federal Reserve, to answer this question, let's go in here. So if you go to the Mastering Stock Market course, and if you go down to the M1 money supply or M2, you can see that this is all the way from the 1960s and 2020. You can see that there's you almost see this huge erection here. I mean, just look at this erection, right? This is huge, right? And we can see that since 2000, I wouldn't say 2008, it's been growing consistently. 2020, obviously, the money supply shot up. And now what we're starting to do is, if you look at the percent change, we're starting to see that the Federal Reserve is starting to suck up all this money. We can start seeing it go below zero. This is the percent change of this. Now you can kind of see it go down here, but if you take the percent change, you can definitely see it go down, right? -4, right? Same thing if you go to the M2 money supply, right? And this is a very beautiful illustration of how it's going down, right? But you can see all that money came in. So to answer your question, I hope that was helpful. But yes, this is going to cause stock market pain as they suck money out of the system. They will induce a recession, and unemployment levels are going to go high. Senator Elizabeth Warren urged Federal Chairman Jerome Powell to not steer the economy into a recession, but yet she put a lot of pressure on Joe Manchin to pass the social infrastructure bill, which thank God didn't pass, because inflation would have been worse because they would have printed more money, right? So, without a doubt in my mind, there's going to be a recession. In fact, if you go to our recession indicator, my favorite one is the recession sniper. I like this because see how when you get something, if you go to our recession sniper here, when you get something that basically fans out like this, it's a healthy economy. But whenever you start seeing it turn into a bullet, it's a bullet in the heart of and the soul of America, right? I know it sounds very graphic, right? Which causes a recession. You can see that whenever it basically bunches up together, it's like a bullet into the economy. Well, look at it. Look at it here, guys. It's starting to bunch up now. It's starting to bunch up. And if you look at the data right now, you can see that the 30-year is 3.30, the 10-year is 3.25, the 5-year is 3.34. So now the 5-year is giving you more money than the 10-year. So the 5 over 10-year has inverted, and then the 2 is close to the 10. This is bad. Okay, this is bad. Okay, let's go ahead here. Please ask questions if you have any. Is the Federal Reserve selling $9 trillion worth of assets? Oh, okay. Okay, good. Same question. Yeah, so there's that. And also, if you guys are interested in our course here, here's a little bit more information. We try to make it affordable for the Al Stock Alerts members. We do have a monthly $11.99, like $12 a month. And if you pay for a year, it's $10 a month. And it includes everything that you see on the left. If you want our course, our interactive charts, and lifetime, yes, I said it correctly, lifetime access for beta access members, limited time only. It'll be lifetime forever, right? There'll be in the courses down below, and you'll get access to everything we offer. We have been featured on Bloomberg, NASDAQ, Yahoo Finance, Benzinga, and MarketWatch because our product works, and I'm very confident about it. Always always a fountain of info. No, yeah, it definitely is. I always try to give you guys the best and a lot of information. But yeah, you guys deserve the best. How you doing? How you doing? Hope everything's good. What? She's tapping me. What's up? What do you want? Want to just? Oh, thank you, thank you. Oh, thank you. Okay, thank you. She wanted to say hi. Oh yeah, so definitely I would go in and rewatch this video because I gave you guys a Clover Health price to sales average. I gave you a Humana average, and I gave you a United Healthcare average. So what you can do is you can take screenshots, go back and take screenshots of each one and do your due diligence and try to figure out what is your price target and what do you think is a fair value. Okay. So that's it. Personally, for me, what I'm doing in my head, I like to be like, conservative. So I would say I always like to play with the numbers. So let's try to zoom in on here so we can see it here. Okay. So personally, for me, what I like to do is it was around what 4.2 or whatever it was. I don't know if we have it up here. Nope, a 4.2. So we'll do 4.2 here, right? 4.2. And then what I'm going to do is instead of 61%, I'm going to drop down the growth rate to 30%. Let's make it a nightmare. And I like to play with the numbers. And I'm like, okay, let's make this turn into a nightmare. If this was 30%, what would be the price? And let me just make sure this. So let me refresh it. I created these calculations so I can do them in my head. So I can see the calculator needs to be refreshed. All right. So let's do 4.2. We're expecting 3 billion in revenue. Shares outstanding is 470.85. Stock price is 223. And I want to say 30%. That's what I want to do. Okay. So if you do 30%, guys, it's going anywhere between 20 to 33. Now, let me just see this for a sec. 81. Yeah, there it is. Okay, so let's do 30%. Beautiful. So even if I do 30% at a 4.2 revenue multiple, which is literally lower than a half, used to be over 10 revenue multiple at the peak of the economic cycle. But let's be honest with ourselves. That was when the Federal Reserve was printing a lot of money. We could get to that level. As Ray Dalio says, these are cycles. But let's assume that Clover goes down to 30%. Now, I mean, they're growing at 300% year over year. And 10,000 Americans are turning 65 years of age every single day, right? Let's do 30%, 4.2. Again, 2024, 2025, you get anywhere between $33 to $56. Again, right around my $48. 2025, 44 to 73. Again, right around my $48 projection, right? For 2024, 2025. But let's just say, let's make it the worst case scenario. 30% growth rate at 0.5. And if we do that, we're looking from 239 to 398. And then let's add 3 to 4 years. So 2026, anywhere between 682 to 1137. Now we know this is a fallacy. I don't think this is true because it's not growing 30% year over year. And the price of sales, once it becomes a SaaS and it's a tech company, it's not going to be 0.5. But I would take Humana's average, which is around, what do we say? 1.195. 1.195. And by doing that, these are the prices that you would be getting. So 5 to 9, 2023, 7 to 12. 2025 is a good year. We can look at these here. Yeah. So even then, based off of these calculations, it's very undervalued. And we're growing this at 30%. Let's say at $5.70. Let's say $5.50. They go in and they want to issue the 300 million. To make sure this is 300 million. 300 million. Okay. $5.50. I hope I'm doing this correctly. It is a bit late. Yeah. 54,545,454. 54 million. So let's add another 54 million to this dilution. They said they might not use it, but let's add it. 524. By doing that, let's say if they do dilute us, $5 to $8.55, which we know is still undervalued, based off this price. So it's still even over that price. In 2025, 2026, yeah. I mean, the proof is in the pudding. Most likely, they're going to grow around 4. Revenue multiple of 4, and then you can look at the prices here. So you could use this calculation as well as our intrinsic value. And then what you can do for our mastering students, you can use the intrinsic value, book value, intrinsic sell calculator if you want to decide to sell once it reaches your intrinsic value calculation. And you can use all of these to help you determine your due diligence and follow it up by your own due diligence, as this is an educational platform. And once you do that, then you can really be able to then you can cross-reference with the Buffett indicator, right? And you can cross-reference with different types of analysis like growth versus value to enter to see if maybe we are, when's a good time to go. This is when it's above this line, it's growth, below value. So there's a lot of value packed in here, and we're going to be showing you guys how to use it. You can know when there's a fear and greed. You can look at the fear and greed index. You can see where we're at on the fear side. And so there's a lot. So let's go ahead and answer some questions, and we'll be close to concluding the live. I really hate the Federal Reserve and Jerome Powell. He kept interest rates low and quantitative. Yes, while claiming that inflation was transitory to get reelected, then reverse the policies. It's unfortunate. And he just basically backstabbed the Biden administration, because if you saw earlier today, he was interrogated by, I believe, a Republican senator or House. I forget. And we could see that he said that, the inflation was only increased by 1.82% since the Putin war. And he said, yes, inflation was going up before the Putin war, which goes against what the Biden administration has been saying, which, if you follow the data, again, look at the data, consumer, the inflation rate here, if you look at the CPI data, Putin's war, let's zoom in here. Putin's war started around in February, right? So it started here. So the change between here and here is not as significant as the change between here and here, right? So obviously this is politics. It's a lie, right? And we have data and a brain to prove it. Now, the beautiful part is if you look at the sector rotation, and if you open up our sector rotation here, you can see that, in fact, let's just reload it really quickly to get a zoom in picture. We can see that healthcare is starting to come back into it. We can see energy starting to fall down. When we can take off other things too and just look at healthcare and technology here really quickly. Let's add real estate. And we could do these things, and we can see that healthcare starting to inverse over the energy. And if we go over the 120 days, you would have been able to predict energy was going to go up. So very helpful information to allow for greater due diligence. Okay. Let's take a quick break. So we do have a drawing. There'll be a link down below. So I've gotten a lot of questions about Moomoo. I really do enjoy them. Most recently, they're giving out 10 free stocks. If you deposit at least $100, you will be qualified to enter our giveaway, which is part of our Al Stock Alerts. 2 lucky winners are going to be entering a raffle where they get a whole year's worth of Al Stock Alerts for free, which you can see here. Al Stock Alerts runs around $12 a month, which is about $120, and it's completely undervalued. It's about $120 giveaway. 2 lucky winners. Another thing is this. If you look at the data, this is FCID insured, and it is a trusted broker that I personally use. So I really do enjoy it. And the way as a day trader, it's important to have multiple vehicles because for people that have been around the block, Robinhood has been it's broken down for a day. Thinkorswim has been broken down for a day. Webull has been broken down for a day. And it's important to have multiple cars for you to work. You can't like not have a car, not have a backup car when you're not going to go to work. So the backup car here is a broker. Let's get to the questions here. I really think that people that claim that Bitcoin is a scam don't understand it and are just claiming that because the price is going down. Well, Bitcoin is adopted by a lot of, like, for example, Salvador, and a lot of other countries want to get into it, but it's going to help level the playing field based off of corrupted currencies. The issue is it's how much value society places in it. That's really what it is. And a lot of engineers, and you got to follow where the engineers are going. They want to work on blockchain technology. That's where all of the talent is going to. And that's how you measure value. So there is a future for it, but there's a lot of leveraging happening right now. As you can saw what happened to Voyager, right? Which I warned people, and I always give you, like, if whatever I like tell you guys is what I tell my family. You know what I mean? I try to keep it consistent. I whatever I tell you guys is what I honestly believe in my mind. You know what I mean? And I'm only human, but you can see the data that I give you, and I try to make sense of it, right? Do the best case scenario. So you want me to do the best case scenario? Okay, so so for people that are watching, please don't take please, for people that are watching, please do not take a screenshot of this. This is just do the best case scenario. Pre-warning, I don't agree with this scenario. I'm going to show you, but this is the best. This is assuming another 2020, which I don't think the Federal Reserve is going to pump this much money, but who knows? They may not learn their lesson, right? But this is the best case scenario. But I doubt it. But this is it. So it is growing 81%, right? We're at 470.85. It's we have to go over to excuse me. We have to go to our technicals and fundamental data analysis. Type in CLOV. Go to financials. It's sales. Go to the quarterly. So the highest it was 10.79. Okay. 10.79. And this is the best case scenario. So 51 to 85. And if you want to go to the 2026, $553 to $922. But I doubt this is going to happen. This is like, you know what I mean? I doubt. That's why I don't show it, right? But yeah, let me just get off of this page because I don't agree. Before someone says, "Hey, you put this," just all right. So, any thoughts on EV versus? Yeah. So I do believe Volkswagen CEO just recently stated that in 2025 they firmly believe they will overtake Tesla in terms of the amount of EVs being sold, which is kind of really cool because Apple tried to make a deal with them about 2 years ago. So it shows you how Apple's on top of it, right? So I'm not too sure. I think EV charging is going to get back to risk on soon. Um, there is $7 billion passed through the physical infrastructure bill, but Ford, GM, but Tesla's scary now. Tesla's starting to be scary. We could do a Tesla video because once that growth rate, look at my past video about Tesla's intrinsic value calculation. So once Tesla drops below that 70, 30, 70, 60, 50%, the stock is going to get wrecked, right? It needs to sustain a certain level of year over year growth. I don't know how they're going to beat last year's growth. That's impressive, but robo taxis and all these other components could be helping them. Yeah, Voyager Digital. A lot of people were pumping this stock without actually looking at the fundamentals and doing what we're doing here. So it's going to be an expensive learning lesson. I hope Clover doesn't go to 50 cents like Voyager. Well, reason why you're comparing apples and oranges because Voyager was over leveraged through this 3 Arrow company, which over leveraged itself with Bitcoin, which is completely, what is risk management, right? Risk management out the door, right? Definitely different, right? Volkswagen has no proof of concept for electric vehicles, unlike Tesla. Yeah, so that's the thing, and they have time to develop it. But even if they develop a car, does it have the technology to do full self-driving? That's what Elon's doing right now. And I have to say, it's been a while, guys. I have to, like, what the hell? People paid for their full self-driving, and it's not even, you know what I mean? So even if you're beta, it doesn't matter. It's like still, still waiting here, right? But even if Volkswagen came online, they don't have the technology and the software to essentially compete with Tesla's software. Likewise, it's like Amazon. Amazon back in 2000, all the people that shopped for books back in the day, 1999, right? Amazon took that data and was able to essentially web it across their own artificial intelligence, somewhat of a program that gave people recommendations over what other people liked of similar interests. Well, Tesla's doing that. Every time someone drives on the highway or in the United States or around the world, Tesla has cameras around the car, and it continuously collects data and inputs it into Tesla's data centers where they can parcelate it, analyze it, and curate their feed-forward feedback loop system in their AI. So that's something that Volkswagen does not have, which is the winner, right? So Mark Cuban endorsed Voyager. That's the thing. I don't care about Mark Cuban, right? Mark Cuban got lucky in the 90s for selling out. I wouldn't say too much of his got lucky, but he pulled out of the market before he got wrecked. He would have gotten wrecked if he would have stayed an extra couple of months or whatever, a year in the market, right? I don't like to follow people's like, I don't care if Warren Buffett buys. Well, I learned everything from him, right? But in his master, Benjamin Graham, right? So I don't really like if Stephen Curry, LeBron James, or what's a good billionaire, or if Trump buys this company or whatever. I don't care, right? I follow the fundamentals. I follow the business. Is there a business model? So that's what most people, unfortunately, their due diligence stops at the nearest celebrity. So that's a problem, right? And I'm not being harsh. I'm talking to you like my family, right? That's how I talk to family. Right? So, EV stocks. And by the way, every time I slam the table, my my camera shakes because it's attached to the table. So I may fix that definitely. So this will be a future. This will be a future project for me, so it doesn't shake. I don't know if you guys get seasickness. Got spanked. Yeah, for sure. Oh yeah, definitely. Any other stocks right now as well, yeah, I'm going to be making a video giving you intrinsic value calculations, but since you guys staying on with me this long, I'll tell them to you guys. So it's going to be it's Meta, CrowdStrike, PayPal. I wrote it down somewhere. I was looking at Google, um, Palantir, Clover, and Tesla, because of the future prospects. And I believe there was another one. There's also some semiconductor chip plays that I have. A lot of my, let's go here. If you go to our private Discord at All Stock Alerts, and if you go to long-term price targets, a lot of them hit. Like, for example, Enphase approaching our price target. We are currently up 54%. There's a lot of like, for example, this stock here, congratulations. Whoever played this, we're up 73%. So a lot of my price targets that I analyze are all in here. So these are the ones that I like. But we'll make a video. It's just finding the time. There's just so much happening in the market every day. Sells more EVs in Europe than Tesla and are planning. So here's the thing, guys. Even though, Volkswagen may not have a proof of concept, if they're selling a lot of vehicles, it's going to eat into the market share of Tesla. And regardless of the argument of which is the better vehicle, if they eat into the market share of Tesla, then the revenue growth for Tesla is going to be threatened. And if that gets threatened, then the stock price will get threatened because it's all based on the revenue growth. So that's the door. Open door. Nice little transition. I'll make a video about that. I've been told by a lot of people. If the U.S. was a growth company, would it be massively overvalued with the amount of debt? We could do an intrinsic value calculation on the USA, but how many shares does the USA? We don't have any. I don't know. I guess the shares of the American people, maybe 320 million shares, right, for the American people. Make more babies, stop diluting, right? No, right. SoFi, we have SoFi's price target in this as well. And I also made a SoFi video as well. So I hope this video was helpful. We don't want to make it too long so people can watch it. We'll probably make a shorter video before that. But if you guys want more one-on-one, you're welcome to our private Discord. And I hope to see you on the next one. Don't forget to sign up for those 10 free stocks. It's free money. And it's a privilege and honor. And I hope to see you guys on the next one. And please stay safe in this crazy world we live in.